Hey, Dan Fitzpatrick here, stockmarketmentor.com on my younger brother, my late brother Mike's birthday. Happy birthday, Mike. Miss you, buddy. I want to look at Yelp today, and this is why. This is one of those things. I got these, drawings here that I was actually using these for teaching at stockmarketmentor.com. So I'll just kind of walk you through it. Back when, let's see if I can get this back. When the stock first broke out, this is when I started drawing lines as far as what I was expecting, or not expecting, but was possible for the stock to be doing and still be acting normally. Okay, so it broke out here the first day, and then the next day gapped down just slightly, but then traded higher, closed lower on the day. And so this was like the breakout would be phase one of a three-stage breakout. And then the second part is, okay, where does the initial breakout end and then the stock correct? So it's looking like the stock is correcting now, but we don't know. You don't know what's going to happen tomorrow. You can only kind of make an educated guess. And so my deal was, if the stock comes back down to 40, that's really where it should find support. Right here, because that was basically where where resistance was back here. So the stock should find support at 40. If it's doing that, if it pulls back, finds support at 40, and then starts moving higher, then I feel good about the trade. I'd probably stick with it. So let's see what happened. And by the way, I was just dealing with a phone call about 20 minutes ago. I just ended the video from about 15 seconds ago here, so I kind of forget what happened. But I'll tell you this, again, I would look at $40 as kind of the line of demarcation. This is the Maginot line, as Kramer likes to call things, where the stock has to stay above there in order for me to feel good about the trade. Also, one other thing. On a breakout like this, you really can't expect the stock just to keep going and going as much as you would like for it to. There's typically always a little bit of a push and pull, and this is why that happens. Here's a little inside baseball. For whatever reason, the stock breaches a technical level and starts to move higher. Retail buyers are buying the stock. Certainly some institutions are, but frankly, what would typically happen in a case like this during this, kind of entire process, first of all, you don't know whether the stock's going up or down. Institutions don't tell you what they're doing. At least they don't tell me. If somebody has that phone number, let me know. But they don't tell you what they're doing. You can just kind of surmise it by what's happening on the chart. This thing had a big move and it's not falling. So you can't really say, we got the big money that's selling this stock. Okay, well, you got a little bit there, sure. But the stock's basically been kind of just grinding sideways. It's just been churning sideways for all this time. And so I would look at this and say, well, I don't know if institutions are buying or selling. Maybe they're kind of doing a little bit of both, but nobody seems to disagree too much that this $40 level is kind of the fair price of the stock. And that's really what we're looking for, is an agreement among all market participants as to what the current price is. See here, over here, we've had one big disagreement. All during this move, we've had a disagreement. Price is up. The bears go, nope, too high. They slam it down. The bulls go, nope, too low. And they push it back and forth. This is a tug of war. But as this goes sideways here, there is kind of an agreement. We'll call it a little bit of a negotiation, right? And so finally, we get this breakout here. And this is where all the buyers have soaked up all the supply that was there at $40, and they still need more. So they've been accumulating it down here, as we surmise, because the stock moves higher, and we say, oh, okay, this is a bunch of accumulation. Now, if instead of going up, like it did here, instead of going up like this, if it fell down, then the assumption would be, the interpretation would be, oh, okay, so there was a lot of distribution here, and this is where the demand was right here. There's plenty of demand along the like the 100-day moving average or this level here. But then suddenly the stock tanks. So, okay, well then the stock has crushed all of that demand, and there's still more to go. Therefore, institutions must be selling. Are you getting what I'm saying here? Because this is really important crap here. What I'm saying is, you don't really know. You can think you know. I think I know a lot, but you don't really know what's happening with a stock until it does what it does. Everything else is just a setup. It's an observation. It's an assumption. It is a theory. It's a thesis. But then you have to wait for the stock to go, you're right, or nope, you're wrong, buddy. I'm going the other way. This is what happened. Okay? So, this is the longest explanation of a couple candles that I can recall ever doing. So anyway, so we get this initial move here on volume, and then we get a pullback, still holding at 40. Okay, now at this point, you go, okay, crap. Well, this didn't hold at 40. Hit the 50-day moving average, but man, I don't really like that volatility, 8% in a couple days. That ain't my idea of a clean breakout. So now you're worried about it. Me? I would have sold it. I think I did. I think I actually sold it up here. I made money on the trade, but certainly not very much. And so then the stock stabilizes here at 40 bucks. Now just kind of watch what happens. All right. So now this is really just... This is just a money sucker now for people that are fast traders that, you're trying to, I want to get it before it breaks out. Now you're just in here slugging it out between yourselves, and, you're not going to make any money doing this. And so then the stock all this time, and then now for sure, everybody's wiped out. So you look at this now, okay, and this whole thing here is a bust. This whole thing is a bust. You look at this breakout and go, wow, that was a heck of a breakout. I think we got money coming. And then over the next week or so, turns out, no, you got money going. And so you have to understand this. And I remember telling our members, hey, we're out of Yelp. I had it on our active trade list. And I said, but watch it. Just because you're not in it doesn't mean you're done with it. You watch the stock and you look for an opportunity. So now we're at last Friday on the 18th. Okay, this indicates to me this is really kind of institutional selling. Nobody seems to like this stock. Okay, now it's holding along the 100. I've never really paid much attention to the 100-day moving average until recently. And over the last, I'd say, month or two, the reason is because suddenly the 100-day MA is relevant. Never really has been before, at least in my analysis. And so here we are on Wednesday, yesterday, and then now, and then now here we are today. If I can get there, this thing's not really allowing me to go. So what I'm describing here is one big money-sucking breakout that didn't work out, but didn't reverse so decisively that you just say, okay, I'm out of here. I'm out of here. This feels like GameStop right at the top. It's not that kind of thing. And so as I look at this going forward, you know what I'm thinking? Wonder what next week's going to bring. Because as I'm looking at this stock, I'll get this stuff out of there. Okay, as I'm looking at this stock, this is what I'm seeing. I'm seeing that we're forming maybe a wider base than there was before. You see how this stock is based for a couple months? This is just a continuation of that. So it's kind of like one big long base like this. And so I'm gonna kind of end it with here. You know, there's no big climax here except for this. Yelp is not a stock that I would be buying and selling right now. I just wouldn't do it. I think it's a money sucker. I think it's a Vitamix with your dollar bills. But I am trading it. I'm watching it. I'm just watching the stock now. Okay, so I'm still watching this stock, and I think there's money to be made on this stock. This right now, again, this is the grinding period where if you made money up here, you're all giving it back here. So instead, just stay away from this stock, but trade it, stock it, STALK, stock this stock, wait for the the right opportunity to buy it. It sure looked to me, frankly, I'll get rid of this. It sure looked to me like this was it. This was going to be the big move that took it out. It's not doing that. So instead, hopefully we'll see this kind of thing, and maybe sometime next month, boom, then we get the squirt out the upside. Okay, so the moral of this story, boys and girls, is that you can be trading a stock and you don't have to be buying and selling it. I'm trading a bunch of stocks. I just only own a few of them right now, okay? All right, check us out at Stock Market Mentor. You get a short free trial. It's getting shorter all the time, baby, but we're making money over there. Next time around, I'll even show you guys some feedback. Makes me feel kind of good.